transactions twice a week. So thank you for joining us. Now, just before we get stuck into it, I just need to make sure that everybody has signed in correctly, and we've got an MH there, so I'm not too sure who that is. So for the person who is signed in as initials MH, if you could sign in correctly for me, that would be fantastic. It's Muzz. Okay, Muzz, no worries. The unit classes and going forward, just let us know and we'll answer those as well. But tonight's agenda is an interesting one because we've got our top 10 systems. So I'm going to primarily focus tonight on the future systems. I'm also going to talk about the Forex. But I've done a fair bit of work over the last week or so on our top 10 future systems, and I've got some interesting stuff to share with you there. We're going to talk about the GMT dedicated server. Now, a lot of the stuff that we're doing at the moment is centered around, obviously, a lot of it's around the automation and getting different components of the automation through different products. And obviously, Tradestation is our number one platform. That's where our systems have been developed and coded onto, and that's really the strength of the V2 system. However, what we're doing is we're actually obviously introducing other platforms. Multicharts is the most recent one, Multicharts 7 through LMAX and Multicharts 8. Now, there are huge benefits to having multiple platforms with your trading, and as we've discussed in previous sessions, the advantage of having Multicharts, because it's a multi-broker platform, is that all your money is not with one broker. Everyone's happy with that. So that diversifies the risk, obviously, and allows us to have much better risk management when we're looking at our trading. And we're going to talk a little bit more about that with our analysis and we go through our portfolio analysis. So that's one thing we're going to touch on. We have an MT4 release coming up, and that's the 27th of September. So we will be releasing the V2 in MT4 on the 27th of September. However, we also have developed up a bridge between Tradestation and MT4. So knowing that our system runs exceptionally well in Tradestation with the currencies and futures, we've decided to develop up the bridge for those people who don't really want to go to singly using MT4, but they want to stay with Tradestation. Obviously, this applies to our Australian traders who, up till now, have been a little bit hamstrung with the ability to trade the Forex, because, as you know, Tradestation doesn't allow Australian or New Zealand clients to trade the Forex through Tradestation directly. However, the workaround there is we've developed a bridge. Now, what is a bridge? A bridge is basically an API or a bit of technology that links up between your trading platform, so Tradestation, and sends a message or an alert to MT4, and that allows you to basically take trades in MT4. So it'll fire off entry, exits, trailing stops. So it basically allows you to run your strategy within MT4, and it allows you to do it within any MT4 platform. So you can imagine that obviously we have a multitude of brokers currently using MT4, and what we've got there is that now we can use whatever broker we want, because pretty much every Forex broker has the MT4 platform available. So that's exciting news, and that will be launched or released on Monday. So stay tuned for that. For those of you who are generally interested in the MT4 bridge, then you'll need to just email info@gmtfutures.com. But I'll be talking more about that later, and there'll also be an alert going out on the members site too. So down to number 4, as I said, the MT4, the actual MT4 platform, so the direct system into MT4, is being released on the 27th. Now, you might say to yourself, well, if they've got Tradestation and they've built a bridge to MT4, why are they releasing the system in MT4? Well, the reason why is that Tradestation has to send a signal to MT4. So you've got a component there that is a third-party component that bridges the signal between Tradestation and MT4. So ideally, with any system or strategy or platform you're trading, you want as little as little plugins as possible, because it's all about making sure that we don't have any latency, and this is why we've moved to a dedicated server for most of our clients and most of our members, because we want to make sure that we get the best fills possible and we avoid that lag in trading. So the advantage of having MT4, the V2 coded directly into MT4, is that it gives us the ability to get the trades off very quickly, and it's in the platform. There's no third-party connection. However, the thing with Tradestation and MT4, they're actually a different build. So our algorithm, when we moved it over to the MT4, it's producing slightly different results. They're still good results, but they're different than Tradestation. So effectively what you've got is now two systems. So, and anytime you run a system within a MT4 platform and you go to another broker, then obviously you've got different data. So that's an issue as well. So maybe not an issue, but it may produce different results. That's why it's important to track if you're one of the pro traders and you're looking to obviously move into a unit class, then there's some massive upside to this, because what it means is that if you do have Tradestation and say for example you've got Multicharts as well, you've effectively got, and you might be running the trend trader system, you've effectively got two different systems because they've got two different algorithms that run. So, and then you build in on top of that MT4, and then you've got a third system, even though you're trading the same trend trader strategy, different data, different platforms, different results. So it's interesting to look at the comparison there. We're going to be doing a bit more work on comparative analysis between the many platforms that we have, and you'll see as we go along over the next couple of weeks how the results differ. Now, what I'm also going to talk about tonight is the V2 momentum and bounce strategy. I'm going to just share a little bit of that with you as well, and we're going to talk about the end of day exit, which is a fix for our futures system. And some of you are finding that the exit, you're wanting to get out obviously at the end of the day, and there is a very easy, quick way to resolve that, and I'm going to be taking you through that. And Mike's going to set up a little bit of a video on how to get out before the end of the close of the session. So now let's move on to now we're going to go straight into the spreadsheets, and then I'm going to take you into to Tradestation. So what I want to do is I want to cover off the top 10 systems, and I want you to I'm just going to get out of this here, and I'm going to just transfer straight over to our that's our trend trader, but I'm going to go straight to the comparative analysis. Now, what I've done is I've broken this down over the last 2 months. Now I can obviously show this going back, for the last 7-8 months, but I've just broken it down over just over the last 2 months, just to show you what's been happening in the most recent trades and results for the trend trader. Now, as I mentioned, this is one of the systems we use. Now, as many of you all know, we've got like 11 strategies. So this is one, and this is the trend trader. Now, what I've done is I've loaded it up, and these are, at the moment, barring about 3 systems that aren't loaded on here, these are our top 10 strategies. Now there is I'm not sure is Brett in the room. Brett, no, I don't think he's in the room tonight. There is a copper strategy that Brett's set up, and it probably is one of the best strategies, with its average trade net profit of over $329, so it's fantastic. And slightly bigger time frame. It's running on the daily chart, obviously a swing trading strategy, but fantastic results, and that would be probably one of the better strategies as far as performance. But let's go through some of these systems, and I've given them a ranking. But what I want you to bear in mind is when we're talking about these strategies, and particularly for the guys in the room, and we've got, I don't know if no, he's not in the room at the moment, but we have. What I want to do with the first strategy up here, 9 to 910, system number 3. Now, Stephen was kind enough to send through his trading statement to me, or his last 3 months of trading statements to me, And what was really good there was that that the crude oil system that he's trading, basically 9 to 9.10, has been running beautifully. And what he's been able to do, and this is one thing I wanted to reinforce tonight, was that when you are running a strategy or a system, you absolutely need to make sure that whatever you're running is you're continually monitoring your performance. And we do this all the time. We say, right, well, if we're running crude oil 9 to 9.10, then we need to keep an eye on the average trade net profit. So we're going to go into that system here in a minute, bring it up, and basically have a look at the average trade net profit, because system number 3 has, we typically trade that only two or 3 days a week. So most of the members are trading it 2 to 3 days a week. It's running for 10 minutes, and it's knocked out about $1,400 over the last 2 months. Now that's fantastic. Now that's per single contract. So as far as your time in the market, and too many of us get, and I was chatting to one of our members today about, the draw of screen watching and that effect that has on you as far as personally and physically. One of the beautiful things about automation is that you can actually move away from the screen. You can obviously set your alerts up, but it's the time as well. It's a time component. So we've got here that, as far as, while it's not ranked as number 1, system number 3, it's definitely one of the best systems purely based on time. So sitting at 14.35. Now the 3 top strategies for the last 2 months have definitely been Giovanni's one there, which is set up there, which is the Russell, and that's NP3 system number 64. So if you go into if you're looking to basically load that up, definitely track that, because that has been performing fantastically. $6,810 over that period. Now the other one that I wanted to draw your attention to, coffee. Now this coffee strategy has been one that we've been looking at over the last, probably 6-8 months, as far as trading and tracking and monitoring it on the daily chart as well, just to make sure the volatility is right. And we know that this system here basically has been dropped down from an 89 tick to a 55 tick based on a volatility drop. So you can see there that is still running well. Its win rate isn't fantastic. It's running at around about 45%, but it does produce some very, very good trades. And one of the keys here with coffee is that if you are going to trade markets that are US based markets, then you are definitely going to want to have a server set up that is close to the exchange, just to avoid any kind of slippage or latency. And that was fairly prevalent when we first started looking at coffee. So that's definitely a market for consideration there, as the crude market. There is the crude market as well. So you can see as we push down, we've got system number 70, 89 tick on crude. Now this crude is running from 8:15 to 9 o'clock. It's obviously 45 minutes, 50 minutes actually, 9:05. So you've got a longer period here on crude, producing some really good results as well, 6,380. So that would be ranked number 2 on our systems. But as you can see here, now if we bundle all of these systems up, and there are actually 11 systems here. I've put in soybeans only because I want to reiterate the fact that you've got to watch your system. So obviously, as our pro trader group goes, we know when the systems that need to be turned off. We know that when we're going to turn the system back on. We've got our circuit breaker, and we're going to go into our portfolio spreadsheet here in a minute and talk about that. But basically, when we are looking at our systems and running our systems live in the market, we absolutely have to be monitoring our days of the week, our longs and shorts, to make sure that where there's something that's either underperforming, or where we see that there's an advantage to be made from bringing a day of the week back on when we had previously turned it on, we want to make sure that we're definitely all over that. So you see here that system number 70, system number 72 as well, performing well, but soybeans has been turned off. Now Steph, you're in the room, you've had this off for probably a couple of months or a month or so. Have you now turned soybeans back on? I know that we were talking the other day and you mentioned that. So soybeans is definitely starting to make a little bit of a rally there. It made on the 19th of August. It produced about 770. It's definitely bounced back into contention. Yeah. So on particular nights, that's back on, and that's something to, if you haven't looked at that strategy yet, or you were tracking it and you've let it go because it went into a drawdown, definitely have a look at that system number 57. So you can see there that overall, over that period, the futures have knocked out about 31k. As I said, the best performing systems, the Russell, coffee, and crude, and but what's interesting here is over that entire period, there's been had you have loaded all of these systems up, and I'm going to talk about this in a minute as to how you run this strategy. Like, do you start with, if you've got a 10k account, do you start with one system? If you've got a 10k account, do you start with two systems and one contract on each? If you've got 100k, do you load all 10 systems up? Because you can see here that the max drawdown is 1.39% over that period, so that's a palatable drawdown. We're going to talk a little bit about risk here in a minute, but what I want to discuss, and this is something that our pro traders will be doing as part of their portfolio management plan, is I want you to, I'll just go back in here. I want you to be looking at your systems, or you should be really analysing your systems in relation to risk, but also you should be thinking about your systems as in, when am I going, if I'm starting with a 10k account, when am I going to add now for those of you who have been through the money management, this will be fairly standard stuff for you. But what I've got here is I've got loaded up here a rate of increase table, and I've got my number of contracts I'm trading. I'm starting with 10k. I've got a delta, or a ratio rate of increase of $1,000. So once I hit $1,000, I'm going to add a contract to my strategy. Now there are a number of ways we can do this, and I wanted to bring this up tonight because you're going to get shortly a new portfolio trading plan that you're going to be completing as part of the Pro Trader program, and this is just in addition to what we've been doing or have done. And for those of you who aren't at module, I think it's module 14 or 15, then obviously that'll come when you get to that level. But one of the things we want to do is we want to start to map out how we are going to introduce our systems, contracts, or what approach we're going to take when we start trading these systems. So if you are going through if you're already trading, and you've probably already had this conversation with me, but if you are getting to the point where you're doing your testing and you're putting together your portfolio plan and you're putting together your system development plan, and your money management plan, then you may want to consider that there's a number of ways we can go about this. Now, obviously the first way is that we trade a single system, and this is what we did with the money management. We started with a single system and we started increasing contracts. So as we started to increase our contracts, as we got a delta increase, we increased our contracts from 1, 2, all the way down to 10. Now that's one approach. Now the second approach was the one that we're also familiar with, which was using the DAX and the Russell together. So what we did there is we had two systems running, and then as we had a delta increase, we increased our contracts collectively on both systems. So had two systems running. Now there is another way that we can do this. We can basically start, now we always, when we're looking at and analysing this information, the key things that we need to remember, particularly if you're trading or you're heading towards running your system based on your risk in relation to the unit class, you need to be tracking your daily risk, your weekly risk, and your monthly risk. So, and it always needs to be coming back to that worst case scenario. So if you take the approach that, right, well, I'm going to trade, I'm going to fill these numbers in here and work out what, if I trade a single system, what is my overall money management outcome if I'm trading a single system using 1,000 delta. Now obviously your delta is going to be based on your max drawdown, and you will have determined what delta you're going to have. But if you're trading a single system, then you're going to map that out and work out what your risk is. If you're trading a multiple system, are you going to trade one system and then once you get a second delta increase, and this is what some of our traders are doing, and this is more of a conservative approach. So if you have a delta increase, say to 13,000, then you add a second system. So we're adding a second system there. So we might have started with crude oil 9 to 910, then we're going to add the Russell, and then once we get our system up to 16k, we're going to add a third system. So the goal here is that we're not necessarily increasing our contract size, but we're actually increasing our market exposure or our diversification within multiple markets. And one of the keys here is obviously to use the portfolio spreadsheet to make sure that if you're going to add systems, you want to add systems that are not increasing your max drawdown. They're increasing your net profit but not increasing your max drawdown. So as we go down on this example, we're adding system after system, and you may find that now as we go into the top 10 systems, all of the systems loaded up in that chart are all trend trading systems. So if you imagine if we put a cycle trading system and a reversal strategy in there, our diversification is going to be much better, isn't it? So that's what we're really going to be looking for. So the third option for us, and the more aggressive option, and this is the one where we would need to map out our risk profile on this one, is that we start with, say for example, 10k. We're starting with one system, but as we add a system, we're actually adding a contract as well. So we might go to, alright, I'm going to add a second system. I'm going to go in with the Russell. I'm starting with crude oil trend trader. I'm going to add the Russell. So I'm going with one system, then I'm adding a second system, and I'm actually adding two contracts. So I'm going two systems, two contracts, three systems, three contracts. You can see that approach is more aggressive, but we know that from our analysis in the money management model that is the fastest way to grow the account, and obviously you still need to manage the risk profile of your strategy, but ultimately it's all going to come back down to your combined risk based on your portfolio, isn't it? It's going to come down to how highly correlated the markets you're trading and when do those drawdowns occur, because ultimately if you add a second system, that really should be providing a smoothing effect on that first system during its drawdown. So what I want you to do is I want you to start thinking about, and you'll get this information as part of the portfolio assessment, start thinking about the approach you're going to take and the time at which you're going to add, what strategy you're going to take, what kind of risk are you going to apply to your portfolio, and what method are you going to go in as far as your systems. Are you going to do more of a horizontal approach to increasing your or adding systems, or are you going to be more vertical where you start off with one contract, one system, or you may even start off with two systems, one contract on each, and then go into the money management of two systems, two contracts, two systems, three contracts. So you might even just stay with two systems, but you can see from and I'm just going to go over to our portfolio spreadsheet now. As we go to our portfolio spreadsheet, you can see that there is a huge advantage, and I'll just move this over. Sorry about the scanning effect here. So you can see if we turn all of our systems off, and this will take a little bit of time to load up, but if we turn all of our systems off and we start with, say for example, we'll start with 100k here. Start with our 100k balance, and we actually we'll start with 10,000 because that's what the example is in the room. So we start with our system. We'll start with one of our crude strategies, so we'll turn that on straight away. So there's 7k. Now our second system we're looking to add in, obviously a strategy that is going to give us a good average trade net profit, and you can see our max drawdown there is 390, so that's had a very small drawdown overall. Our adding in the Russell, we go up to 775. We add a third system in, and we'll add the system that we know has made a considerable amount of money, there's crude. So we go from 775 to 1200. Still, still overall max drawdown is our maximum drawdown is $1,200. That's very palatable, and we've got 8.1%, and we've got our average trade net profit has gone up to 37. Now that is just net of profit. That's not with no money management at all. So if we add our money management to that, we're looking at about 182 using a delta, and I've got the delta in there of 1,500. So if we go back to a delta of about $1,000 using our rate of increase, you can see that drops that's over 7 months, and that drops the overall profit down. So it's very important, particularly if you are starting with a smaller account. As you can see, this account here takes a little bit of it. So the drawdown occurred really at the start, didn't it? So really for us as traders, the hardest part is getting that first delta increase. Once you've got that first rate of increase, that first $1,000 or $1,500, whatever the delta is that you're going for, then it becomes much easier, because if you're starting on a 10k account, you've got one system, then, and the guys who are doing their track records or putting stuff together, and they're starting with say 10, 20, 30, 40k as a test up, they can speak from experience. As soon as you get that first rate of increase, that first delta increase, it becomes easy because you're adding another system or another contract, and you only need to really get over that first 3 or 4 contracts, and then you can really start to see some great growth in the account. It's just that first contract, that first delta increase, that is the one that really needs to get you going. So it's very important if you're starting out to look at what system is going to give you the best start, and what system is going to be the best system to bring in at phase 2 of your analysis, and so on. So just making sure that, obviously keep on top of your systems, making sure that you track their overall performance, because what you're not going to want to do is, you're not going to want, and this is something that Giovanni's building into our spreadsheet, you're not going to want to see a system that has previously been performing well, and you've got it loaded up in the spreadsheet, and you're tracking it across, say you're tracking 3 or 4 systems, and you just miss the fact that one of your systems is starting to underperform because you're tracking, say, 3 or 4 systems together, and you just overlook that, because you've got a lot of systems that you can kind of substitute and put better performing systems in if you find that one is underperforming. Now remember, as we mentioned before, Giovanni will be introducing a new version of this spreadsheet, which will basically be looking at the average trade net profit tracking from 10, 20 and 50 days. So it'll be the most recent average trade net profit, so you can see exactly what's happening with your system. And the other things we'll be including in there is the circuit breakers. Now, for those of you who don't know what a circuit breaker is, or haven't heard that before, is in relation to the systems, the circuit breaker is really the point at which you turn the system off. So, for example, if I'm trading the Eurobond 144 tick, and I've got my maximum drawdown is 1,300, my average drawdown is, say, for example, $900. Well, I might not want that system to go to 1,300 and have a max drawdown. I might decide, well, if the average drawdown is about 900, I'll work my circuit breaker, my R break, or whatever you want to call it, the circuit breaker in it at about $1,000. That way at least I save a bit of money from the max drawdown, because there's no guarantee that we've seen the worst drawdown on the Eurobond, is there? There's no guarantee that that is the worst drawdown, and we know that as we're trading and watching these systems, we've got to be cognizant of the fact that that market dynamics will change, and we have to be ready to be able to turn systems on and off accordingly. It's like managing a team. Once you get one of your star performers, or one of your performers that's one of your players that's not performing well, you bench them and bring someone else on. So that's a bit of what I wanted to talk about tonight. Obviously, the systems in this spreadsheet relate to what I showed you previously with the comparative analysis as far as the top 10. You can see there, though, the one that I've left out, which is doing exceptionally well, is copper, and you can see the maximum drawdown there at 27.62. You're 33,412, profit. So you've exceeded your 10 times your max drawdown net profit. That's one of the gauges for, some of the things that we want to see with our systems is we want to see an excellent average trade net profit. Anything over $50 is starting to get to a point where we're seeing, something that will run well in the market. So the higher the better. $50 would be our minimum that we want to see. We want to see an average trade. We want to see our net profit at least between 6 to 10 times our max drawdown. Now these strategies here reflect 7 to 8 months of trading. So we've still got another 4 to 5 months here to load into this and see how the year panned out. So at this stage, all of these strategies are running exceptionally well as far as drawdown to net profit. So that's a good result. And they're running well in real time. So traders, that's what I wanted to cover off with the top 10 tonight. I just wanted to take you through. As I said, the 144 is running exceptionally well. When you combine the 144 and the 55 tick together on the Eurobond, what you're getting there is you're getting a very good combination strategy. Your max drawdown is very small. If I do the numbers here, I'll show you this. And this is one question that came up during the week. So why have we got two strategies? Well, one's long, one's short for a start. So we've split those two up. And if I turn these two off, you'll see that if I load up the 144, the maximum drawdown is actually pretty high, 1365. But if we load the 55 tick up, it actually does a very nice job of smoothing out that drawdown. And that's what our systems need to be. Remember, our systems, you're trying to pick systems that are balancing each other out during the drawdown. So we're trying to smooth that drawdown out and increase our average trade net profit and our overall net profit. So guys, that's what I wanted to show you there. Let's go back into Tradestation, and any questions before I leave the spreadsheet? Any questions before we jump back over to Tradestation? Otherwise I'll just flick straight over. Okay, I'll move over now. So guys, as I've mentioned, I wanted to show you a couple of the strategies here, and for those of you who are, and I'll just turn this over to Tradestation, for those of you who are unfamiliar with our strategies, we have got dynamic support resistance, which plot as our green and red lines here on the chart. So that's our dynamic support resistance, and really the strategy is based around dynamic support resistance. So as price moves in real time, that support and resistance will dynamically update as we go, and that's really the catalyst for us potentially taking trades. Now this is an 89 tick chart. We've also got it running on the Renko charts for those of you who are very keen on Renko. If you haven't seen Renko before, that's basically a Renko brick. So there's 5 pips per brick in this example here. This is on the Euro US dollar. And again, when we get a trade set up, if we get a long setup, price needs to break through our resistance. A short setup, price needs to break through our support. There are a number of filters we've got in our systems, and I'm going to show you shortly. I'm going to take you through a look at the 2 new systems, which is the bounce system and the momentum system. So still using support and resistance, but adding some additional indicators there to help us with getting a valuable insight into whether we take trades in the market. So they're filtering out longs and shorts. So guys, one of the things that we find works exceptionally well on our Renko trades and our Renko system is the cycle trader. So you've got, this one's obviously running exceptionally well with the trend. The Euro US dollar runs well, but when we get periods where price consolidates, the cycle trader does a very good job of buying support, selling resistance. So this is a period where the cycle trader, once we've lost our trend, as we do here, once we lose that cyan brick, that color, then we go into cyclical type activity, and this is where we're looking for opportunities to buy support, sell resistance, buy support, sell resistance. So that type of trading is another strategy that we obviously look at. So for those of you who are new to the Pro Trader program and are looking to decide what kind of strategy am I going to use for my analysis, am I looking at, do I want to go with the trend system or do I want to go with the cycle? My suggestion is that you load both up on your charts, because as you can see in the Forex market, you'll find the euro, US dollar and the other currency pairs, they'll run exceptionally well for a while and then they'll get into a period of consolidation. It's that consolidation that you want to take advantage of. So if you're running a cycle and trend strategy together, you're getting an opportunity to take advantage of both styles or both types of market conditions. Whereas if you're solely running the trend trader, what are you doing? You're basically hoping that, that 20% of the time when the trend's on, that you're getting at least enough money to keep the account momentum ticking over. So what typically happens with someone who's just trading the trend trader, they might be trading 4 or 5 different currencies. Whereas with a cycle trader, we know from experience that if you have the cycle and the trend loaded up, you've basically got, if you get consolidation on the euro, great, the cycle's going to work. If the trend is firing, like if you've got range and volatility, the trend is going to fire, and they won't trade at the same time. So basically, when, as you can see here, when the trend is on, the trend's working. When the cycle's on, the cycle starts to play out. But you will obviously get those false breakout type setups, and you can't really avoid that. So you've just got to, and this system here is an always in system, so it's running all the time. And what I'll do shortly is I'll load up a very good example of the cycle trader here shortly. But I want to take you through the system number 64. This is, as I said, this is one of the top strategies at the moment as far as performance. So I'll just run this up here. Now we're having a look at the again, the trend trader on the Russell. Now let's have a look at the overall performance here. You've got an average trade net profit of $89. That's very good on the Russell. Your net profit is 20k. Your max drawdown, this is what I really see. You see your percentage win rate is not fantastic. This is a trend trading system. So for those of you who are looking for higher probability setups or looking for a better percentage profitable trade, then you're probably looking more at investigating the 144 euro bond. That's running at about 75%. So as I mentioned previously, sometimes when you're putting your combination of systems together, you may want to run a high performance system that is basically running at a higher win rate, but it may only be running at 1-to-1 or slightly better. But what that's doing is that's giving you turnover. So that's making sure that like if we go back to our analysis here, if we combine we'll just jump over here for a second. We'll just switch over to the Excel spreadsheet again. If we combine our Russell, so there's our Russell system. We know that's got an average win rate of about 35%. But our Eurobond 144, that's got a win rate of 75%. That's got a fantastic win rate. However, its reward to risk is nowhere near as good as, for example, and you can see it here. It's made 285. It's turning over good money. Obviously, it's turning over. It's giving you revenue, and it's losing weeks are very minimal. But then you've got something like the Russell that is going to deliver exceptionally good profit. It's got a good reward to risk, exceptionally good, and this is where finding the balance is key. If you want to have something that's turning over more frequently, obviously the faster the turnover, the quicker your money management's going to kick in, isn't it? So if I run these two together and I find that my percentage win rate is 35%, and for the first, over a 10-week period, for the first 7 weeks I don't make any money, then I'm not turning my account over in the first 7 weeks, am I? It's just basically, it's running according to its probabilities. However, if I've got a high win rate system that is running at 75% and I know I'm making money and that's going to smooth out my equity curve. It's also going to give me a little bit of a leg up when I'm combining it with, say, the lower win rate system. That means I can turn the account over, I can increase the profitability, I can maybe hit that first delta, and then I can get to that first level of a rate of increase quicker if I combine the two systems. So it's just thinking about that as well. So if we go back to if we go back to the TradeStation, I'll take you back there. The results are obviously are great as far as the profit, but again, you've got to get your head around the fact that your mindset around the fact that we're dealing in probabilities. It's not gonna produce as good a excuse me, I've got the hiccups, as good a percentage profitable trades as our euro bond, but when it does pay off, it gives you exceptionally good good winning trades. And you can see there that the largest winning trade's 2,000, the largest losing trade's 155. So we've got a fantastic reward to risk there. And these are some of the things we need to consider when we're kind of looking at combining our strategies. So guys, that's what I wanted to take you through, obviously, on the on that part of the presentation. I'll just close that down, and we'll go into we'll now flick over to our new strategy. So what we've got here, and I'll just push this over. Okay, so what I'm going to do here, and I'll just now if I can get you to hold the chat, because I'm going to explain how this new strategy works using support resistance, using we've got our momentum filter down the bottom, which is we've got our MACD / Bollinger Band set up, and we've got our so I'm going to take you through how this process works and the two types of strategies that we're looking to run here, and then I'm going to take you into the actual into the dynamics, or the actual automation as well. So we're going to go in here and have a look at, once this is coded up, I'll just explain some of the additional things that we're going to have in the automation, and just let me know if you can see that that automation box come up, or is that not featured in the room yet. Okay, grey box. Alright, so I'll just cancel out of that, and we'll just continue on. I'll just make sure that moves off. Alright, traders, so basically what we've got is we have, and I'm just going to peel this right back, we've got our linear regression lines up there. So we've got our two levels of momentum filter, our MACDs. So for those of you who attended the How to Trade the MACD presentation, you would be familiar with the fact that we love the MACD, and what we've done is we've introduced the MACD into this strategy. And there are two components to this system. There's basically there's about 3 or 4 components to this system, but I'm just going to take you through initially the bounce system, or the fade. It's the fade or the bounce, depending on whether you're long or short. And what we're looking for initially is we're looking for we need to have dynamic support and resistance. So we need to have the component of dynamic support and resistance as part of our trade setup. So if we're looking for a potential short, we need to have seen price move up, making higher highs, as you can see here, and we need to see prices making higher highs, and we also need to see that, and this is obviously on a 144, so it's not a huge time frame, so we're not talking about a weekly chart or a daily, we're talking about a very small time frame. And the other thing we need to make sure we see is we need to see divergence. So our bottom MACD / Bollinger Band is on a higher time frame setting, and our top MACD is on a lower time frame setting. So ideally what we want to see is we want to see price making higher highs. We want to absolutely see this resistance level. For a sell setup, we need to see our resistance set up, and what we're looking for is we're looking for divergence between both of these indicators, similar to the reversal, but I'm going to explain what is different about this. And the other thing that we're going to need to see is we're going to need to see that our red dots start to actually print red and show that we've lost that momentum, that long bullish momentum. So you can see that Now the filter that you'll see, or the filter that we'll have as far as our strategy, will be either price. Remember we spoke about the zero line. When the MACD crosses the zero line, it's an indication that we've got bearish momentum. When the MACD crosses above the zero line, we've got an indication of bullish momentum. So once the MACD does cross that zero line, you've obviously got that confirmation of momentum. The fact that the MACD or price is making higher highs and your MACD is actually making a lower high here tells you that you've got a waning of momentum. So what we're looking for is a confluence of our setup. So if we get our dynamic resistance set up here, the other thing that we'd ideally like to see as far as a setup would be a key level. So if we had a key level here, say the 144, this would be the perfect trade. And this is something that's going to be part of the strategy. So you can imagine that when you're looking at setting up your strategy automation, you'll be able to go in and say, right, well, I can test my strategy based on key level setups, dynamic support. I haven't got the strategy box opened up yet, so I'm just going off the charts. You'll be able to add in dynamic resistance, and then you're also looking at your criteria here, where you see, okay, so I've got my Bollinger Bands. I need to see price. I need to see my MACD closing back in within my Bollinger Bands and turning red on the smaller time frame, and then I need to see on the larger time frame MACD divergence as well, but also our MACD closing inside the Bollinger Band. So that is basically your criteria for your setup on the fade strategy. Now flip it around the other way for a buy setup, and you've got the bounce setup. So our fade is really looking for dynamic resistance, a confirmation of a key level. That would be that'll obviously be something we'll be testing on. And remember that this is just the initial preview of the system, so we will be sending out our systems for our pro traders to kind of have a bit of a play with, give some feedback, and do some additional testing on. But the results so far have been fantastic particularly on the futures markets. We haven't done a huge amount of testing on the forex yet, but the stuff that we've done on the futures has been really good. So let's have a look at exactly what the second phase of this setup. So there's our first phase where we get the divergence and we get our dynamic resistance sell. Now the second phase here is that we've got, and this is one of the filters we'll be adding in, is that we've got price then closes below we get a cross of our linear regression lines there, and we've got confirmation that that price is closing or red, and the dots are red and closing below our midline of our Bollinger Band, which gives us a potential sell setup, and confirmed on the higher time frame back on the sell here. So this would be a level where we would be looking for a potential momentum sell. So when we get that resistance, we've got price closing here on the Bollinger Band, and we've got our red dots closing back below on the higher time frame MACD. Then we've got our potential entry point there. Now the system will be very similar to the trend trader in that we're using these additional filters to clear out some of the trend trade setups that similar to this one here. You'll often find on the trend trader that you get taken into a trade that doesn't really go anywhere. And the MACD, the single MACD has done an okay job of filtering those out, but this momentum setup is showing to be much higher probability setups as far as the trades, because what you're getting is a setup and a confirmation of a break, and then our cyan candles print white, and then we're away. So basically we're in the trade, and then what we're looking for is our pullback strategy again off dynamic resistance there, and that sets up a nice little setup there. And again, the trade's only taken when we get our MACD confirming that it's back inside of our Bollinger Band. So that really helps us to kind of filter out some of the strategies or some of the setups that potentially had not a lot of momentum. So it's doing a couple of things. It's reducing the number of trades we take. It's giving us a slightly different strategy as far as filtering with the MACD and with the linear regression lines, and it's adding to our average trade net profit by increasing the probability of our trades. So you can see here that again we've got another opportunity there to add to a position in based on our MACD coming back down again, back inside the Bollinger Bands. We've got a set up again, and you can see here that this eventually this ends, and it ends nicely with the MACD showing a nice little divergence set up here on the higher time frame and the lower time frame. So I'll just move this up. So here we have, as you can see, we've got a divergence on the lower time frame. Price is making a nice little run down here. Price is making lower lows. We've got our dynamic support. So one of the keys to this whole strategy is that dynamic support and resistance. Not just randomly taking dynamic support resistance, but taking it based on our bounce strategy. So this opportunity to bounce in and into the trade. We've also got, you'll see here that we've got a combination of a few things happening. We've got divergence, so we've got price making lower lows. We've got our MACD making a higher low. We've got our dynamic support setting up here, so that's our bounce point. Now the last piece of the puzzle here is that we need to make sure that we get our MACD closing back inside the Bollinger Bands and triggering a green for a momentum buy. That momentum buy is the catalyst to get us in. Confirm that with a break of the higher bands on the Bollinger Bands, and that's our catalyst to get into the trade. And we've also got our linear regression lines closing as well, which allows us to get in. Now, at the moment, I mean, this is just a little bit of a preview of the system. Obviously, there's going to be a fairly comprehensive training process of using this, but at the end of the day, it's fully automated. So each one of these sessions that we do going forward is really designed to help you get familiar with the strategy and then use that as part of your automation. So you're really looking at, all right, well, when I'm looking at doing my testing with the automation, what are the components that I've got with the system? Well, I've got a number of indicators here, and I'm just trying to find out objectively which of these indicators gives me the overall best edge and objectively gives me the best edge on a consistent basis. So the advantage for us is that there's no subjectivity to this, is there? With any of the systems we run, we're objectively testing it because we're coding them all up, we're running the systems, and they either work or they don't. So if you've got a filter in your system, and remember too that all of these indicators, as far as the indicators we've got as filters here, they're just an opportunity for us to get into the market. And then ideally we want to use our high reward to risk strategy. As you can see here, once we get in on this strategy, where do you think our stop's going to be once we get into this? Now, some of you are testing up stops at the moment as part of your back testing. So if we get into this trade here, our stop is, we're in there at 143.34, and your stop is either the low of this low here. So you can see here you've got this previous swing low. So I've got Damon, you're testing the trend trade at the moment, Damon. You might run your swing trade stop here at the low, or you could actually go back to the lowest low, which is back here, but obviously you've got support here, so you'd be probably wanting to run it at the most recent low. So your risk here on this trade is very small. Your reward is exceptionally good because you're either looking to trail this system up, or you're looking for the next once you break this area here, you're looking for the next level of resistance, dynamic resistance, where you've got that you punch in a high there, and then you've got the resistance across there. So once you've lost that, once that trend breaks, and you lose the trend momentum, and you get your resistance set up, that may be a target. However, as you can see here, this thing just keeps going. So it does a nice little pullback again. So depending on how you're running your stop, if you use the linear regression lines, or you use dynamic support, or you use the or you use the swing low method, then you potentially can take advantage of a nice solid run up there. So obviously, if you're using the linear regression lines, your channels, you're going to be running a fairly open stop, and you've got to be prepared to see trades move and come back a fair way. But if you want to take advantage of those bigger swings, then you need to have a bigger stop, obviously. So traders, that really is the bounce. Again, I'll just explain that again. We need to see price coming down. We need to see divergence set up. We need to see that confluence of either a key level, and we've got it. We've got the key level. We're going to have the key level filter built in, but we've got that dynamic support there. So once that dynamic support breaks, we're into the trade as a long setup. And the other thing we've got is we've actually got the momentum here as well, and you'll see here too that our linear regression lines have crossed, so that gives us the catalyst for taking the potential trade as well, or a confirmation at least. So traders, the elements to this strategy are fairly simple. They all base around, again, dynamic support resistance, confirming setups with momentum, and making sure that that you can either, as far as the strategy goes, you can either add in or take out the dynamic, the linear regression lines as far as the trade setup. So there's a number of variables we'll be able to add to this. And if I go into the strategy again, and I'll just see if this works this time. So I'll just right click on the strategy itself. We'll just go in and I'll just refresh the chart here. So for those of you who are looking to have a look inside of the strategy, again, it's start time, end time. There won't be any, obviously, 2-bar breakout, but all of these things will be consistent as we've had in the past. So we'll have our initial stop in there. You'll have the ability to run your trailing stop, support, resistance, your swing high, swing low. And also we'll have a key level pivot in there too, so we'll be able to filter on key levels. And again, we'll have our profit targets in there, so you can select your profit target. The other thing that we'll have as a profit target as well is divergence profit target. So we'll be able to, if we get an opposing setup initiate on the trade, we can set that as a potential target. You've also got your max wins, max losses. You've got your profit. You can set your profit up, so we set that to true, and then we're going to have a profit target. So it might be that your circuit breaker for the day, and this is one thing we mentioned in relation to risk. If we've got a number of strategies that we're trading, and our max risk for the day for our portfolio needs to be, say, $500, then we need to make sure that we go in and our strategies are set to meet that $500 mark. Then we've got our days of the week, and you can see here this one's turned on Monday, Tuesday, Wednesday, so I should say Wednesday, Thursday, Friday's off. So again, we're using the filters there. Volume and volume spike, volume divergence filter will be one of the things that we add to it as well. And then you've got your MACD settings. So again, if you're running the system, you'll have a MACD setting for the lower time frame, a MACD setting for the higher time frame, and then you'll just have your momentum filter, which will determine whether you take the trade either before the zero line or after the zero line. So one of the things that obviously for us as traders we need to make sure is that that we're objectively testing anything that we do, and we do that through the automation, and then you can go back and analyze whether those filters are actually working or not, because we know from the testing we've done on the other systems that what sometimes appears to be a good idea in when you're looking at the chart, when you start putting it in and coding it into a strategy, it actually doesn't look that good at all as far as the numbers. So the numbers typically don't lie, so we want to make sure that we run all these filters through our automation and make sure that it's got a clear and definable expectancy and edge. So guys, it won't be too dissimilar. It'll be pretty much the same as our normal V2 setup. It'll have a number of new features. As I said before, the key level filter will be in there, and we're going to start, I think Mike and I are going to start to build in start looking at building in the money management position sizing model as well. So for those of you who have been waiting a while, the money management and position sizing model that we've spoken about in the past, we're going to build that into the strategy, so it'll automatically calculate how many positions you should be trading based on your starting balance. So that'll be a nice little feature for the systems as well. So guys, that is a quick. We have access to his Dukascopy now. Now we're just confirming the final arrangements, but basically it's been confirmed today that we'll be able to use Dukascopy to trade multicharts, and we'll actually be able to open accounts for as minimum of 10,000K. Now usually to open an account with Dukascopy, you actually need to have $100,000 to open an account with them to use their technology, their straight-through processing, and if you have a look at their website, they've got a great setup over there as far as their arrangements, and they do allow you to trade their platform using multicharts, and you can trade multiple systems and be long and short, obviously, the currencies, which is fantastic. So that is something that we've been looking for as far as our currencies. So you'll be able to do that through them, and I'm just finalising the arrangements this week, and we'll be releasing that on Monday. So for those of you who are interested in exploring that as an option, it'll be available to you on Monday to have a look at. You can download a demo account, use your Multicharts platform, and start having a look at running your strategies there and just comparing how they go to Tradestation, because remember that most of you, if not pretty much all of you, have had either access to Tradestation or used Tradestation, so it'll be good to compare Tradestation with Multicharts and just see how the Dukascopy execution runs and how well that performs using Multicharts. So traders, that was pretty much it for tonight. The Dukascopy details will be available on Monday as well. I'll be taking you through the momentum system on next Monday as well, the new momentum system, and those two strategies will be available towards the end of the month for testing from our members. So guys, if you've got questions, feel free to fire away, and happy to take those now. So if you have any questions, comments, more than happy to take those. Now, as I mentioned, for the pro traders, that portfolio analysis that we went through with our money management, I'll be putting that together as a portfolio document for us to fill out. So basically, what we're doing is we're going to want to be, as part of the portfolio analysis, we're going to want to, as you go through and develop up these strategies, you're going to definitely want to look at your max risk for your systems. So just touching on that again, because some of our traders obviously are running multiple strategies. So one of the keys there is that remembering that if you're moving into, or you're potentially going to be moving into a unit class, you need to have a look at definitely have a look at module 18, and that talks about your trading mandate. What are the requirements for risk in the trading mandate? Now, the trading mandate is the document at which you're going to use to run your unit class. So if you're going to a managed fund, you're going to want to have a look at how that risk sits with your current strategy, because ultimately when you do your track record, that is one of the keys to obviously getting the best result across the line. The risk profile of the strategy. You may only be trading a 20k account, but if you base it on a portfolio of 100k, as we saw there, that risk drops down to about 1.3%. As I said with the systems before, ultimately we're looking for systems that have got an excellent average trade net profit, that have got minimal drawdown. So we're looking for 6 to 10 times our drawdown to max profit, and we're looking for strategies that we're able to combine that will allow us to have turnover, so a revenue type strategy as well as a capital growth strategy. So those capital growth strategies are the ones that we talk about, where the payoff necessarily doesn't come every day, or it may only come once a week or once a fortnight, but when it does, it delivers a good reward to risk. Whereas the revenue type strategy that we talk about has a higher percentage win rate, but doesn't have a super reward to risk. So they're the ones that you need to be careful of watching. Looking at the dynamics of the market. Is it time to be looking at the long short bias, particularly with the markets that we're trading at the moment, particularly with the Russell. The Russell's definitely got a long bias, so that would be one that I would be watching the daily chart on for, a moving average crossover, just to make sure that you're keeping track of where the bias is on that market, and then if you can switch it, then you can do that very quickly, and then make sure you capitalise on the short side when that, if and when that does occur. So traders, that pretty much wraps us up for tonight. I've just got another question there. Are you only coding Renko for MT4 or other systems also? So Gary, we're coding it for the trend trader. So basically, you'll be able to trade the trend trader in MT4, and we're also using so the trend and cycle. They're the two systems that we run at the moment that are very popular on the currencies. Also the reversal. So we're going to try to get all of our systems set up in MT4. Obviously with Tradestation you'll be able to trade anything through it'll with that bridge you'll be able to trade anything through Tradestation to send through to MT4. No, it's based on mark to market. So basically you can't calculate that on open equity because then your position sizing will be out at the end of this, potentially out at the close of the day. So typically the position sizing is based on mark to market. So that way we're managing our risk correctly. Otherwise, if we go in and we're adding additional contracts and that open equity drops intraday or over a number of days, and then our risk increases, then we potentially might be exposing ourselves to additional risk outside of our trading mandate. So we need to have closed equity as far as our position sizing. However, there is a variation to that in the pyramiding strategy. So that pyramiding strategy, that's a good question, Eric. The pyramiding strategy to me is separate to the position sizing strategy. So the position sizing strategy I just showed you a minute ago, that relates to the mark to market of your account. So basically, if your closed positions are you've got a say 1,000 delta, you've made $1,000 worth of profit, then you're on to your next contract. However, on our pyramiding strategy, which is different to our position sizing strategy, our pyramiding strategy is one where, and I spoke about this in the MACD presentation, if you have a pyramiding strategy, you're looking for trades that set up at a certain level. You might be going with one contract, say, and this would be part of potentially your capital growth strategy. So you might be going with one contract and your risk, so you're not risking anything in addition to what you're actually starting to trade with. So you might be trading with, say we start with a risk of $200 on this strategy. That's our max risk. So, and let's say we've got one contract. Now, regardless of what we've got an open trade profit. We're not quite at our second contract increase, so our first delta, but we get a push down here, and say we make $200. That pushes us up to our second contract. That's kind of regardless of what happens with our position sizing strategy. With our pyramiding, we're going to start with a risk of $200, and as soon as that risk is zero, so as soon as we've got zero risk in that strategy, and we can basically pyramid into a trade here, for example, then we'll take this trade with a second lot as long as our initial risk is zero. So as long as we don't exceed our initial risk, and even if our initial, say for example, if we had a second lot here, then and we've got profit in the first lot, then we're basically then looking to add a third strategy. So ideally what you're wanting to do is you're wanting to make your initial trade, your initial position risk, say 3/4 of your overall risk for the trade. That way the ability to pyramid in allows you to, say, pyramid in here and then add another lot here. And then as you get these pullbacks based on the strategy, you're just adding positions and compounding this position. So at no point are you breaching your mandate as far as risk for the day. So if someone says to me, right, well, Shane, your risk for the day is 2% or 1%, that's fine. What I'm doing is I'm just pyramiding in based on open profit, or if the positions close out, I've got no additional risk, but I've got additional contracts in the market. So that's separate to our position sizing strategy, but is a very, very good strategy as far as pyramiding, and it's one of the things we built into the reversal system, and we'll build into this momentum slash fade system as well, just as an addition to what we've already got. Now, so ideally at some point we're going to get knocked out of this trade, but you can see here there are 1, 2, 3, 4 opportunities for us to add positions to this trade. So overall we're going to have 5 contracts in the market. We're eventually going to get knocked out here. So this trade here is going to be a losing trade, but we've managed to take profit on all of these positions, and we lose on the last one, obviously. So that means that even if we are trading one contract, and this can be the case for people who are trading with a 10k account or a 20k account, and you're trading with one contract, you're starting with one position, you can still use this pyramiding strategy if that's how your strategy is developed up in your testing, and it proves up as far as your the markets you're trading. Now, obviously, not every market has these runs, so you want to be picking markets that are conducive to a sweeping run where you've got these nice pullbacks, and it's really just about testing up markets based on the strategy. Some markets will go really well with the pullbacks, and you'll see them. The DAX is particularly good at it. The currencies are good. The euro is really good at it. But other markets like the euro US, the US Swiss, and markets like that, they tend not to get on those sweeping runs. The volatility might be lower. So you've just got to pick your mark properly and go with what's going to provide you with the best outcome. So yeah, that's probably a long-winded explanation. So basically your delta is calculated based on what your delta. There's 2 ways you can calculate your delta. You can say, right, well, all right, my delta is going to be and I'll just go back to this. If my drawdown is, say my drawdown is, I'll just pull this up. My drawdown is $2,000. Then a conservative delta might be $1,000. An aggressive delta would be $500. A very conservative delta would be $2,000. Because what you're doing is you're basing your delta on your max drawdown. Now, the other thing that you've got to be careful of is that how much data have you looked at. If your data sample is only 3 months, then it's quite possible that you haven't even seen your max drawdown. So you need to be a little bit careful of, number one, the way you calculate your delta, and number 2, what kind of a circuit breaker you have too. Because remember that if you're trading 4 or 5 contracts and your delta is you've got an aggressive delta, then you're going to be, it's like a double-edged sword. You might be getting a good increase on the way up, but you're definitely going to be losing money very quickly on the way down, because your rate of decrease, well, it's going to be kicking quickly, but you're going to be trading a lot more contracts. So if you go through a sustained drawdown with a significant number of contracts, then that's going to really erode your capital base or your profit. So this is one thing we do with the money management. We definitely focus in on having the proper circuit breaker for your system, because one of the things that most traders don't manage is their circuit breaker, because they've got that optimism bias that their system's going to turn back around. So you've got to make sure that system is managed objectively, and that you don't have that. I think everybody has an optimism bias in relation to their performance and their system. So just hoping the system's going to bounce or perform well is completely different to having a designated circuit breaker where you turn the system off and go to your system library and pull something else out. So guys, I'm going to wrap it up there. Thank you for your time. It's been a pleasure. We'll basically finish the session there, And if you do want, for those of you who are new into the room, if you want to find out more information about the program, just send an email to Luke at info@gmtfutures.com. And for those of you who I speak to on a regular basis, I look forward to chatting to you during the week. So thank you for your time, everybody. Look forward to catching you, obviously, next Monday. Cheers.